Good afternoon, everyone, and welcome to our IEEE-USA webinar, R&D Tax Credits. I'm your host, Jonathan Cho. Our presenter for today is former IRS engineer Richard Bernstein. Richard has spent half his career as a software developer and field application engineer in telephony and instrumentation, and the other half as an IRS R&D engineer. His specialty is in auditing the software R&D tax credits of the largest high-tech, pharma, media, and financial companies in the U.S. Well, I'll let him talk more about that. Without further ado, I'll now pass it off to our presenter. Welcome, Rich. We're very excited to hear what you have in store for our audience today.
Hi, how are you guys? I'm going to talk today about the R&D tax credit for engineers. So I'm going to be speaking on an engineering level and a scientist level rather than on an accounting level. I actually retired from the IRS about 6 months ago. And if you have any additional questions at the end of this presentation, we're going to be doing live questions. But if you have any additional questions, you could always email me. And my address is richbernstein@IEEE.org. So the first question is, what is the R&D tax credit? It's a tax credit that reduces a company's tax liability. I'm going to talk about how that incentivizes companies to invest in R&D, and I'm going to talk about the history a little bit. Now, not all Treasury agents are IRS agents. The IRS administers the U.S. government's method for encouraging R&D work to be done in the U.S. The R&D tax credit is a way to give money to U.S. firms for doing qualified R&D work in the U.S. So it's rather than an IRS agent taking money from the public, in this situation, the IRS agent is giving money. It's giving money to companies that are doing qualified R&D work here in the U.S. Historically, the tax credit was introduced in 1981, and it became permanent in 2015. Now, first question you probably have is, why should you care? Why is this relevant to IEEE members? Now, the issue is that many members of the IEEE work at R&D at companies that qualify for the credit. So understanding that the credit can benefit your employer and thus yourself, the government refunds part of your salary back to your company if you're doing qualified work. It's based on wages mostly, a little bit on supplies, and a couple of other things like contracts. And I'm going to talk all about that in this presentation. So if you have 5 engineers working at a company and 5 managers, those 5 engineers and those 5 managers, and perhaps you have 5 support people, and we'll discuss what a support person is, that's a considerable amount of money. If you say 20% of their wages get handed back to the company to encourage the R&D work to be done in the US, that's a considerable amount of money. But what happens if there's 100 engineers or 1,000 engineers or 10,000 engineers? That's a lot of money. And that's what's happening in the R&D tax credit. A lot of money is being handed back by the IRS to technological companies doing work here in the US. About me just for a second, I have a Bachelor of Science degree in electrical engineering and an MBA in accounting. I worked as a software developer and a field application engineer in telecom and in instrumentation for 17 years. And then 17 years after that, I went and became a Treasury agent. And I did that up until retiring. So I have 17 years as a Treasury agent working on the R&D tax credit. I've been published in Tax Notes, which is a industry periodical about the R&D credit, and I am a member of the IEEE Research and Development Policy Committee. So what are we going to cover today? We're going to cover two main topics. One is, how is R&D financed in the USA overall? And in that section, I'm going to go into the R&D credit and how that is configured. And then we're going to talk about the basic steps of getting a tax credit for your R&D. Now, the most important part of this presentation is trying to get across to you that the tax credit, the success of the tax credit is based not on the documented. So, and we're going to cover an acceptable parent, and that's why we're going to talk about it. Okay, so a breakdown of R&D financing. First of all, what is important to the IRS? It's not the results of the research, it's the documentation of the research. It's how you explain what you've done, in a format that the IRS can digest it. In the US, R&D is financed through federal government agencies, grants or contracts, and the agencies are things such as NASA, National Science Foundation, Department of Energy, Health and Human Services, Department of Defense, and through non-federal ways, and that's through higher education and nonprofits, and also via businesses doing R&D on their own, and it being paid for by the R&D tax credit. I'm going to give you a few seconds to look at this. This is an agency breakdown of R&D funding. So as you can see, the big one here is the Department of Defense. That's not a surprise, at $69.3 billion. These numbers, I believe, are from a few years ago, not that long ago. Health and Human Services at $68.8 billion. And then you could see smaller amounts, National Science Foundation, NASA, Department of Energy. These are smaller amounts. But let's look at the overall picture. I'm going to do that slide now. Overall, if you look at the overall R&D being done in the US, the vast majority of it is being done by businesses. Here you see the business R&D is 72% of the R&D that's done in the US. Well, the agencies that we just discussed only makes up 20%, and other things such as non-federal governments and higher education make up only 8%. So the R&D tax credit covers the vast majority of R&D that's being done in the US. Now, when I'm talking about the IRS in maintaining the R&D tax credit, it's money being given out by the IRS. It's not money being taken by the IRS. You got to think a little differently in your mind about the IRS's function in this. They're handing out money to companies that are doing the R&D work here in the US. Now, why talk about taxes when dealing with R&D? As I think I just explained, that the monies get transferred via the tax returns, but it's not taking money, it's giving money to companies. The majority of R&D is financed in the US by IRS tax credits, and engineers make up the majority of the blue slice on the pie chart. It's engineers' wages. Now, most people think of the IRS as the tax man, but when dealing with R&D, the IRS should be considered Santa Claus. First thing I want to do is to set you on the right course in thinking about this is the difference between a tax deduction and a tax credit. they both reduce a company's tax liability, but in two ways. A tax deduction is an amount that gets taken off the gross receipts of a company. So instead of, for example, IBM earned $100 in gross income, they have expenses worth $20. Now they only pay taxes on the $80 that's left. A tax credit is different. A tax credit actually works on the money that the company owes. So for example, Apple, say earned $100 in income, and they've documented a tax credit worth $100. Now the taxes they owe are zero. So this explains how companies can earn hundreds of millions of dollars yet zero in taxes. And we hear that complaint all the time. You know, Amazon's earning so much money, they don't pay any taxes. And that's because they're doing R&D, qualified R&D. By the way, I'm not going to talk about any specific companies here. These names I'm just giving you are examples. I haven't audited any of the companies I've mentioned, and I don't plan on talking about any companies that I've audited in this presentation. Okay, so how does the tax credit work, the R&D tax credit? First, a company does its normal R&D, and it's got to be for development of what's called a business component. A business component is the thing that you either make and sell, or something that you make and use internally in your business. Before the end of a tax year, a company usually will go out and hire an outside consultant to generate an R&D tax credit study. And that's usually what's handed to the IRS. So that R&D tax credit study is very important. That's the crux of what you're giving over to the IRS, who's making the decision about whether what you did is qualified or not. Now, companies file taxes with amounts that are documented in the R&D study, and the IRS engineers review that study and determine whether the work has been done in adherence to the tax law. Okay, so the definition of R&D. How could company X not be doing any research? Typically, about 100,000 firms apply for the R&D tax credit a year. And these are both S corporations and C corporations. Silicon Valley story. I was doing some work in Silicon Valley for the IRS, and it had little to do with, I wasn't doing an audit or anything of that sort. And one of the managers, one of the tax managers for the IRS out in Silicon Valley took me aside and said, "Rich, how can it be that company X is not doing any research?" And company X, I can't say who they were, but it's a very famous company. You all know the name. They do fantastic things. And my answer to her was that it's not that they aren't doing R&D, it's that they did not document it correctly. It has to be documented in a very particular way in order to be qualified from the IRS's point of view. And if you document something in a form that the IRS agent can deal with, you're much more likely to get the tax credit approved than if you put it in a form where he can't deal with it. Now, so often credits are disallowed due to a poor write-up and a lack of documentation. Pragmatism versus textualism. Textualism is a way of interpreting the IRS code that focuses on the words, leading to decisions often based on punctuation and grammar. That's one way of doing it. Another way of looking at the work that's been done is as a pragmatic approach, trying to understand the meaning of what has been done and how important that is. These two things go back and forth. Every few years, the IRS agents are pushed more into a pragmatic approach, and then later on pushed a year or two later into a textualist approach. The textualism is actually the most important one at this point. If the work that you've done meets the IRS code, the Internal Revenue Code, as it's written in the document, you have a much better chance of being approved for that R&D and to get the tax credit. So what are the basics at a 10,000 foot view? Why should you care? To understand, you need to know some of the basic definitions. We're going to talk about a little bit about business components. We're going to talk about qualified research. We're going to talk about what QREs are. We're going to talk about substantially all and shrink back, and what things are allowed. The costs that are allowed for the R&D credit are supplies, wages, contracts, and that's contracts done by somebody else, work for your company, and shared computer access, which is really there for historical reason. It deals with back when people were using mainframes and you time shared on a single computer. There's some wording in the IRS code which allows you credit for that. And then we're going to talk about the four-part test. The four-part test is an important part of the R&D tax credit, and it's something that you need to prove to the IRS that you've done these things. So what is a business component? A business component is an important building block of the research credit. The business component, as I mentioned before, is the thing that you either build to sell or the thing you build to use internally at your company. It could be a new or improved product, a process, software, or a formula. And as I said, it can be used internally by your company or offered for sale for commercial purposes. The activity can lead to, it should lead to a new or improved functionality of the business component. That's what you're doing to it, the performance or reliability. And in summary, the work must be to discover information useful for the new or improved business component. Now, what kind of work is qualified? Qualified work must use the principles of a hard science, such as biology, chemistry, physics, engineering, architecture, any of those things. You got to use the principles of it. Work that is done using computer science is also qualified, and work developing processes, formulas, production lines, software tools to use in the research is also qualified. So if you create a tool that you're going to use in doing research, for example, in chemistry, that is qualified because it's used in some other qualified activity. And one of the most important things is use of a process of experimentation to solve an uncertainty. And we're going to talk what a process of experimentation is. What's not qualified for the credit is management studies, marketing or social sciences, work dealing with taste or smell, and seasonal modifications. There's some very specific things that are not allowed. You need to stay away from those things, or if you did sort of veer towards those in your R&D, you need to make sure that you don't push that that functionality in your R&D tax study. Now, I mentioned that the four-part test is a pretty important thing. The four-part test are 4 tests that need to be looked at for each business component. So say you're a company and you make 5 different products. Each one, you need to go through these 4 questions about each one of those business components. It's got to be a permitted purpose. So the work must be done on a specific business component. That's what that means. Can't be done in general. It's got to be for that specific business component. Uncertainty. The work must be done to eliminate technical uncertainty about the design or methodology for the improvement. I've seen companies come and say, well, we were uncertain whether we could sell this product or that whether other people would want to buy it. That's not a technical uncertainty. It's got to be something technical about the business component that is uncertain. You have to take a look at the process of experimentation. And this is a process used to evaluate alternatives to achieve the desired outcome. The process of experimentation oftentimes is trial and error. That's the biggest way that people are using a process to look at alternatives. Some people do modeling, some people do much more complex things, but in general, I would say the majority of companies in the US are doing trial and error to come up with their alternatives. And technical in nature, as I mentioned earlier, the work must rely on the principles of a hard science, such as physics, biology, engineering, chemistry, or computer science. And this has got to be done on a business component by business component basis, meaning that you can't do it in general and then say, this is for business component A, and this is also for business component B, and this is also for business component C. You need to specify how you have met each of these 4 things for each business component. Shrink back. Shrink back is used when an entire component doesn't qualify. There's an example in the IRS code talking about a tugboat. A company built a tugboat as an experimental tugboat, and it was the strongest tugboat. They had a new engine in it. They had a lot of new stuff in it, and they tried taking the entire tugboat as the qualification, and it was millions and millions of dollars for this tugboat. And it turned out they needed to shrink back to the new parts, not the existing parts. They started with an existing tugboat and they pulled out the engine and they put their new engine in. They had to shrink back to the engine itself, not the entire boat. So first you got to shrink back to the qualified part. If that part itself doesn't qualify because it has more than 80% unqualified activities in it, then you need to shrink back to the next largest piece, and you keep doing this over and over again. That 80% number is sort of a magic number, also known as substantially all. What that means is if 80% of the work is qualified, then the entire project is qualified. And that's, you'll hear that term shrink back, and employees performed on a business component are performed by researchers. There's 3 types of employees' wages that are allowed for the research credit. It's the researcher, it's the person who supports the researcher, and third, it's the direct supervision of the researcher. There's a requirement that 80% of the wages that were done on a new business component need to be done by researchers. So you need to be careful there in your mathematics of how your calculations come out, because that I have seen tax credits disallowed based on that. So what type of expenses are allowed in the calculation? We talked about this a little bit before. The wages of qualified job titles. So if somebody is a engineer, they're a computer scientist, they're a chemist, and they're actually doing the glassware, they're doing the work, they're actually doing the actual research, that's their wages are qualified. Also, their manager's wages are qualified, and the wages of the person who helps them. And the person who helps them typically is the person who cleans out the lab, the person who types up the reports about the R&D as it's going on. That's a support person, and their wages are also qualified. Then supplies. Supplies are things that get used up. They're not a capital cost. So for example, if you build a new building to do your research in, that is not qualified. That's a capital expenditure. Supplies are the printer paper. They're the sulfur you're using that you're pouring in your chemical reaction. That's a supply. And again, it's only for the R&D part. It's not for the manufacturing part. This is for the R&D part of business. Then contracted out work. So if you're a company and you contract out a subcontractor to do a certain part of the work for you. So for example, say you're a pharmaceutical company and your expertise is not in computer science, but you need some software written that does something that will help the development of the R&D, that is qualified. And you actually have to take a haircut on that. I think it's 70% or 60% of the wages that you pay out for that is qualified. And then there's money spent on time-shared computer services. And this is an area, an up-and-coming area. Some people think that money that you spend on something like AWS, where you have a lot of companies sharing the same computer hardware, could be qualified for that part of the R&D tax credit expenses. Okay, so back to the wages. As I mentioned, there's three different kinds of wages that are qualified. One is of the researchers themselves, and that's the engineer, it's the chemist, it's the physical scientist. Any of those things are qualified. Then you have the direct supervision of the researchers, and this has to be first level. So it's got to be the guy who's directly in charge of the work that's being done. It can't be a higher level, a second level, or above. A lot of companies in the past have tried putting in the VP who has, numerous departments under him, and that is not a qualified activity. And then there's direct support of the researchers. And as I mentioned before, the IRS code talks about somebody who types the reports, somebody who cleans the lab, that kind of thing. Someone who cleans out the test tubes. And the wages is the majority of the tax credit. So this is really the crux of where the money is coming from. Now, as I mentioned, computer software is qualified for the R&D credit. And there's two kinds of computer software. There's computer software for lease, license, or sale. So you write Microsoft Excel and you sell that as an example, or it's software for internal use, and that's called IUS, internal use software. That is a special area, and it's for software that you use, that you've written for your own company to use. And in order to, we talked about the 4-part test before, and all business components need to meet the 4-part test. But software, which is internal use software, needs to meet an additional test called the high threshold of innovation test. and it's called the three-part test. So you got the four-part test, and then you got the three-part test. The three-part test is made up of three things that you need to prove about your internal use software. You have to prove that the software is innovative. And the definition of what is innovative actually had changed in the last 5 or 6 years. These days, innovative means software that either reduces costs or increases speed. One of those two things. And you need to directly address those in your credit study. The next part of the three-part test is not available over the off-the-shelf software. You can't just go and make your own version of Microsoft Word because you want to make your own version of Microsoft Word. You need to only take software that you can't buy off the shelf. And then there's the substantial investment test. This is a kind of hazy area. I've never actually seen it come up in practicality, but it is in there. That means that the company must spend a substantial amount of money working on a project or a business component to be able to take it for the tax credit. And the thing that makes this hard is you have Fortune 500 companies that developing a piece of software is not a major part of their costs, where you have a little company, a 10-man company, and developing software for internal use is a major part of their costs. So this is not an area you're going to see very often. This can often be proved with a PowerPoint slide showing that the company did discuss the amount of money they'd have to spend. There's ways of getting over this particular barrier. And now I'm going to talk for a little bit about the R&D Tax Credit study. This is the document that usually you have a consultant write for you. I have seen even large companies write their own, so it's not that unusual, but it describes what the project is or what the business components are. You got to list the business components and the wages for each of the business components separately. And you need to break out who are the researchers, who are the supporters of researchers, and who are the managers, and their wages also. You should include transcripts of interviews with engineers with an emphasis on the role, as I mentioned. You should state how each of the business components meets the four-part test. I said that already. If the project software, you got to go through the additional three-part test besides the regular four-part test, which is standard for all business components in the U.S. You got to do the additional three-part test, and you got to make sure that the employee's wages for a business component meets the substantially all requirement. And we discussed that before. That's 80% of the activities need to be qualified. You should include interview transcripts if you have them. Those are kind of important. And you need to document how the credit was calculated. Actual spreadsheet showing the numbers and how the calculation was done. So in summary, the R&D tax credit is administered by the IRS, and it's the IRS giving out money, not taking money, as I've been saying over and over. Most of the R&D done in the U.S. is paid for via the R&D tax credit. Written documentation is much better than verbal documentation. If you have done interviews and you document the interviews, if you have PowerPoint slides of presentations that talk about any of these things, emails, JIRA reports, contemporaneousness is important. Contemporaneousness means that the documentation was created at the time the R&D was being done. And my suggestion is that you try to stick closely to the Internal Revenue Code in the study to reduce problems with qualification by the IRS. If the IRS code says that models that you're building are okay, then the models are okay. You shouldn't try to work things in there where the words are not there. It's easiest if you follow the code as closely as you possibly can. Okay, I want to thank you for this R&D tax credit presentation. Again, you can reach me at richbernstein@IEEE.org. And we're going to do some live questions now. Jonathan?
All right, folks, we are now at the Q&A portion of the webinar. Please post your questions in the comments section and we will load them onto the stream for Richard to answer. We did receive some questions early in the webinar that may have been answered at a later point in the presentation, but we'll go ahead and answer them again for our viewers who joined us late. So Rich, before we go on with our audience member questions, I did have a question of my own that I wanted to ask. So my first question, what kind of documentation is needed when looking to qualify for the R&D tax credit, would you say?
Written documentation is the best. Something in writing. You can rely somewhat on testimony of an engineer. So if an interview has been done and an engineer says that they've done certain things, that could be handed off as documentation also. It's got to be contemporaneous documentation. Documentation that was done at the time the research was done. That's a very important word, contemporaneous, in this. So.
Fantastic, thank you. My next question, how or can the credit apply to income tax liability at all?
Well, these are corporate returns that we're talking about. So there's really no income tax liability. That's a personal thing. And if it's a S corporation, that would be a pass-through. And it does affect the company prior to it getting passed through to you, yes. But income tax liability is something that's not really thought of in the R&D tax credit.
Gotcha. Thank you for that clarification. All right, so we'll move on to our audience member questions. We do see that we have quite a few from our audience members. Great to see a lot of engagement. Our first question comes from Russ. Russ had posted earlier during the live stream, companies have a small or no tax liability when they roll their potential profit into additional R&D or that are operating at a loss on invested capital. How does the R&D tax credit help here?
Hi, Russ. The story is that companies that are taking this are not working on a cash basis. So they are doing their R&D and doing their tax returns on a yearly basis. So at the end of each year is when they put in their return for the previous year. Now, there can be overlapping times, like you started one project and you got finished with it, and you started another project before that's done. The cutoff point is the end of your tax year, whether that is December 31st or a fiscal tax year for your company. So it doesn't really work. It works in a sectional way, not an ongoing way.
Thanks for the question, Russ. This next question comes from Arlissa. Hope I'm pronouncing that right. Arlissa asks, what is the typical ratio of wages to supplies as seen in most R&D tax credit applications?
Hi, Arlissa. Supplies is usually a much, much smaller number. You got to understand, supplies officially is something that gets used up. So it's the paper, it's the printer ink, it's the sulfur that you're pouring into your chemical mixture. It's something that gets used up. So it's very, very much smaller. Maybe I've seen where it's 1,000 to 1 ratio of supply of wages to supplies. Much bigger on wages.
Thanks for the question. This next question, is professional business insurance eligible for R&D tax credits?
Business insurance is not eligible for the R&D tax credit. Some utilities would be qualified. So if you are using a massive amount of electricity because of the experimentations that you're doing in the lab, you would be able to take the part of the cost of the electrical utilities off, but not business insurance, no.
Thanks, Rich. So Russ asks another question. If R&D is paid by a third party, for example, a grant, but work goes beyond, is this additional work and only this additional work eligible for R&D credit?
If you separated it off, the R&D that's paid for by a third party, that belongs to them. And in that case, you're the subcontractor and you're doing the work for them. They get the tax credit for the work that you've done for them. But that additional part, if you separate that off into we're going to do a new project and it starts at this place and it happens to be at the end of where their work was done, and you do that work yourself and you are at risk. A lot of it is based on the risk. It's called benefits and burdens, and often it appears in a contract between a vendor and a third party, a supplier. So the answer is you can separate that off, but you will not get the credit for work that you've done for somebody else that they're already getting credit for.
Thanks, Rich. And thanks for the question, Russ. This next question, on the contracted work expense, do both companies obtain the credit in such case, the recipient of the work as well as the contractor who performed it?
Usually it is one person. Two companies can't get it. And that decision about who gets it, this is similar to the question I just answered. It's based on the burdens and benefits, and that's outlined in the contract that you have with the third party contractor. You know, who owns the R&D that's been done, who's paying for the work, is the work being paid for regardless of whether it's successful or not. These are all things that get looked at by the IRS in determining who actually gets the credit, the tax credit.
Thanks for the question, Alyssa. Our next audience member, you mentioned C and S corps and follows up with, are LLCs excluded?
No, LLCs are not excluded. Nope. You have to be, I probably should have mentioned this, you have to be a company in business doing, you can't do the R&D work prior to starting the LLC. So it's once you start the LLC, then the work you do could be qualified. But work you've done prior to actually founding the LLC would not be included.
Gotcha. Thanks, Rich. And this next question may kind of be related to that as well. Our audience member asks, is LLC sole proprietor in a startup with minimal income but documented expenses a good candidate for R&D tax credit? Would you probably say similar answer, that they are qualified?
Yeah, they're qualified. But again, it's in startup, there's a special calculation for startups. You're not the way it used to be in the 1980s. It was based on the work that you did, the sales that you did between 1983 and 1988. These days, there's a special provision for startup companies. And if you speak to your tax person about that, he can explain. It actually will work out well. If you're a small company, as you know, you're probably taking the whatever profit you have, the sole proprietor himself is paying himself that amount in wages, right? That's very common. So the answer is it's a good candidate for the R&D credit as long as you AIM for startup companies, the startup company calculation, which is different than the C corporation or the S corporation calculation.
Gotcha. Thanks, Rich. And really appreciate seeing all these really great comments from our audience members. So this next question, excuse me, does development of software to analyze and answer new technical questions appear to meet R&D credit requirements?
Software generally does qualify. The kind of software that does not qualify is the very basic software of like creating a screen. If you create a screen for your website, that does not qualify. But more of the scientific software development, the internals, would probably likely qualify. And when you write up your research tax credit study, you would emphasize the parts that would be qualified rather than the fact that you've made screens and you've changed the colors from green to blue. That doesn't really matter to the IRS. It's the actual work that you've done. And then you just need to describe how you've done the process of experimentation, the steps you've taken to ensure that an iterative process is what it's called, an iterative process to solve an unknown. It's more about the way it's written up than about the actual work you do, as I said.
Thanks, Rich. And thanks for the question, Russ. Our audience member, George, asks, would a copy of the applicable sections of a researcher's lab notebook be appropriate documentation?
That would be great documentation. Absolutely. That and something like JIRA. I don't know if you guys know what JIRA is. It's used a lot by software companies to keep track of things that they fixed. And you have to be careful there because the fixing of bugs is usually not qualified, but the development work is qualified. So yes, a researcher's lab notebook would definitely be valuable.
Thanks for the question, George. Building a prototype, does the whole prototype material get counted as a supply?
It depends on whether you're selling the prototype as an actual, like, for example, I gave the example before of a tug being built. Now, the tug has a lot of parts that are not R&D. You have the heel, you have this little, the decking. There's a lot of parts of the tug that were not actually R&D. It was really only the engine that was R&D. So a prototype is also a hot button item with the IRS for the R&D tax credit. If you're going to sell that prototype, that's different than if you're building a prototype, which is a sample, and then you're going to make other versions of it to actually sell. So that's a kind of hazy area. You'd have to have somebody go through the IRS code to determine exactly match up with what you're doing, with what the IRS code and the court cases. There's court cases on all these things. Finding a court case where someone built a prototype and you're not going to get 100% of the supplies. Again, the supplies, it depends on what it is. Usually a supply is something that gets used up, but I understand what you're saying. It could possibly be qualified. Yes.
Thanks, Rich. This next question, is contracted R&D work eligible? If so, what percentage?
Yeah, it is eligible. I think it's 60%. There's some number, 60 to 80, somewhere in that area is a certain percent of it that's qualified. Yes.
Thanks for the question. With regard to the earlier question, Russ asked, small companies investing in new technology may not have an annual profit. How does tax credit help them?
There's a way of taking the employee, the Social Security, not Social Security, the tax roll, the employer. I'm getting kind of confused here, but there's a way of taking the amount that a small company withholds and being able to take that as the amount instead of an amount that you've actually calculated. So the best bet for something like this, where you have a small company, is to, I'm assuming it's a startup company. So within the first 5 years of it becoming active, there's a special calculation which takes into account that you're not going to be having multi-million dollars of income like a large corporation is. So the answer is it's all about how you file. I would speak to your CPA and let them know that you want to file the small business exception on the form 6765.
Thanks for the question, Russ. So our audience member says, I sold my company in 2021 after 22 years. I filed taxes in 2023 for 2021, received a proper extension. I paid $6 million of tax on capital gain tax of the company. Can I go back and apply R&D tax credit? I'm assuming retroactively.
Well, yes and no. There's two. There are some special rules that you have to take a certain kind of tax credit if you didn't put in the research tax credit on the original return, but you should be able to file an amended return. Yes, absolutely.
Thanks for the question. Our audience member asks, is there a standard form that is available on the IRS website for research tax credit study?
There's no form for the study. No, the studies are done in all different ways. And there is the form 6765, which is the actual form that you need to fill out to get the tax credit, but there's no template for the study, unfortunately.
This next question might be a little bit confusing, may need to be reworded. Could I get tax credits for a project against other income from non-tax credit income of an LLC activities? Actually, I'm sorry, our audience member clarified. I meant, could I get tax credits for a project against other income from non-tax credit activities related to an income in an LLC?
Could I get tax credits? R&D tax credits is what we're talking about here for a project against other income. Yeah, the income that you are getting the credit against, the taxes, you calculate your taxes and then you take the tax credit and subtract that off the amount you owe. It doesn't require that the amount you owe was due to the R&D project. Yes, so it's, by the time it gets to the bottom of the tax return, it's just general income. Doesn't matter where it came from.
To our audience member, thank you for the clarification on the question. So, Rich, I do believe that might be it for audience member questions. I guess before we close off, since we're approaching the end of the hour, did have last couple questions of my own that I would like to ask. First one, beyond tax savings, are there any other major benefits to the R&D credit that you think should be emphasized or would like to emphasize?
Well, being I'm assuming this is all for U.S. citizens. I see it says IEEE-USA. Yeah, it's all for work to incentivize R&D work to be done here in the U.S. So it is good for the United States to do R&D here, to have the expertise to do it here. So in a very broad way, there are major benefits to doing it.
Great, thank you. And finally, my last question is, any suggestions on maximizing the benefits of R&D tax credits for a company that has received or maybe is looking to seeking to qualify for them?
There are many firms out there that will go through your project and suggest parts that would be qualified that normally you would not think of. They could that is something that in order to maximize the R&D tax credit, you'd have somebody looking through the projects you're doing and determining this one is good, no, this one is not good, and making a pile of the good ones and a pile of the not good ones. So yes.
Fantastic. Thank you. All right, everyone. We are reaching the end of the hour and unfortunately out of time. Rich, thank you so much for joining us today and for giving your expert insights on the research tax credit program and how, engineers and scientists can present their work successfully to the IRS. Really appreciate having you with us today.
Okay, thank you. Thank you, Jonathan.
And thank you to our audience for tuning in and for your great questions as well. Before we end things off today, I do have a couple of announcements. First, one moment, please. First, the IEEE-USA Nominations and Appointments Committee is seeking your help. There we go. In identifying U.S. IEEE members who may be interested in and well qualified for service in IEEE-USA Board of Directors positions, including the 2026 IEEE-USA President-elect. Self-nominations are allowed, and the portal will accept nominations through July 8th. That is the 8th is the Monday, that Monday. So please send in any nominations and help us find some great candidates. Secondly, due to popular demand, we have created a booking, pardon me, a booking inquiry form for those who would still like to join IEEE USA on our Alaska cruise this September. If you missed our room block deadline earlier this month and would like to join us, please fill out the form on our website at cruise.ieeeusa.org. I'll also include a link in the comments section as well. A member of our reservations team will respond to you within 2 to 3 business days. And we would love to have you join us. And finally, IEEE USA webinars are designed to help you find your next job, maintain your career, understand ethical considerations in the workplace, and learn about other career building strategies and public policy developments that affect your profession. If you'd like the content presented in today's webinar, be sure to check out our other ones. We have an entire catalog of presentations available for your viewing pleasure on our website. And finally, don't forget to like and subscribe to our channels and check back daily on our social media for future live stream updates. Have a great day, everyone.
Thanks, guys.
I had the coolest job that any electrical engineer could ever have on the ground crew for Solar Impulse 2, the first solar-powered airplane to fly around the world only using the power of the sun. IEEE USA has given me a competitive edge because of their support system. It is so much easier doing something and being out of your comfort zone when you have someone there saying, you got this. IEEE USA is more than just a network. It's a family.